Imagine waking up on a Tuesday morning and heading to your local gas station. You expect the usual minor fluctuations, but as you pull up to the pump, the numbers on the digital display make your stomach turn. The price per gallon has not just gone up, it has doubled overnight. You check your phone, thinking it is a localized glitch, but the headlines are all screaming the same thing: the age of cheap energy is over. This is not just a temporary spike caused by a pipeline leak or a seasonal surge in demand. This is a fundamental, structural shift in the global order. For decades, our entire way of life has been built on the assumption that energy would always be affordable and accessible. We built sprawling suburbs, global supply chains, and a consumer culture that relies on the frictionless movement of goods across thousands of miles. But today, the friction has returned with a vengeance. As you watch the dollars tick upward on the pump faster than the gallons, you realize that your paycheck, your grocery bill, and your future plans have all just been devalued in real time. This is the moment the world starts to shrink, and the cost of everything you touch is about to be rewritten. To understand why this matters, you have to realize that oil is not just something you put in your car, it is the hidden ingredient in almost every object in your room. It is the feedstock for the plastics in your laptop, the synthetic fibers in your clothing, and the chemicals in your medicine. Perhaps most critically, it is the foundation of modern industrial agriculture. The fertilizers that allow us to feed 8 billion people are derived from natural gas and oil, and the massive machinery that harvests those crops runs on diesel. When oil prices remain permanently high, the cost of calories begins to climb at an exponential rate. In this new world, a simple loaf of bread becomes a luxury item in developing nations, and even in the wealthiest economies, the weekly grocery run starts to consume a terrifying percentage of the average household budget. We have spent a century building a civilization that effectively converts ancient sunlight into human survival, and when the price of that conversion doubles, the very math of our existence no longer adds up. The logistics of the planet are the first to break under the weight of expensive energy. Our global economy is a giant, interconnected machine designed for just-in-time delivery, where a component made in Germany is shipped to a factory in China and then delivered to a customer in California. This entire dance relies on the cheap movement of massive container ships and cargo planes. When the cost of bunker fuel and aviation gas stays at record highs, the global part of global trade begins to evaporate. Shipping companies are forced to slow down their vessels to save fuel, turning 2-week journeys into month-long ordeals. Air freight becomes prohibitively expensive for anything except the most critical medical supplies or high-end electronics. Businesses that relied on low-cost labor in distant countries find that the cost of shipping the product back home now exceeds the savings in wages. We are witnessing the forced nearshoring of industry, as companies desperately try to move their factories closer to their customers to avoid the energy tax on distance. The world is becoming a series of isolated economic islands, and the variety of goods we once took for granted begins to wither on the vine. As these costs ripple through the system, the world enters a period of permanent, structural inflation that no central bank can fix with interest rates alone. Usually, when inflation rises, the Federal Reserve raises rates to cool demand. But you cannot cool the demand for heat in the winter or food on the table. This is stagflation on a global scale, an economy that is slowing down while prices continue to rise. Central banks find themselves in an impossible position. If they raise rates too high, they bankrupt the businesses already struggling with energy costs. If they keep them too low, the currency devalues even faster. In the financial markets, the era of the growth stock comes to a crashing halt. Investors flee from tech companies that burn cash and hide in the only sectors that are actually making money: energy and commodities. The stock market, which for decades was an engine for middle-class wealth, becomes a volatile casino where the house always wins because the house owns the oil wells. Your retirement account is no longer a guaranteed ladder to freedom. It is a casualty of a world where the cost of living is rising faster than the value of your assets. This economic pain inevitably turns into geopolitical aggression, and the map of the world begins to bleed. In a world of scarce and expensive energy, the countries that sit on the largest reserves become the new ultimate powers. We see a dramatic shift in the global hierarchy, as oil-producing nations in the Middle East realize they hold the world's jugular. The tension between the United States and Iran reaches a breaking point over the Strait of Hormuz, a narrow passage through which one-fifth of the world's oil flows. As prices remain high, any threat to this choke point becomes an existential threat to the survival of the Western economy. The drumbeat of war grows louder as nations begin to realize that energy security is no longer a policy goal, but a military necessity. A single misstep in these waters could trigger a conflict that makes every previous war of the 21st century look like a minor skirmish. We are seeing the return of resource nationalism, where countries stop trading and start hoarding. The risk of a full-scale US-Iran war is no longer a distant possibility. It is the logical, terrifying conclusion of a world fighting over the last few drops of affordable fuel. While the West struggles with higher prices, the developing world faces an outright collapse. In countries where the average person spends 50% of their income on food and fuel, a permanent price hike is a death sentence. We see the start of a massive, global wave of social unrest. Governments that cannot afford to subsidize energy for their citizens are toppled in weeks. From the streets of Lagos to the squares of Colombo, the energy protests turn into full-scale revolutions. This creates a secondary crisis of mass migration, as millions of people flee regions where the cost of survival has become impossible. The borders of wealthy nations are pushed to the brink, creating a political backlash that further destabilizes the global order. We are watching the undoing of decades of progress in global poverty reduction, as the high cost of energy drags 1 billion people back into subsistence living. The social fabric of the world is being torn apart, not by an invading army, but by the relentless, grinding reality of a price tag that no one can afford to pay. Our cities and our infrastructure, designed for a world of $60 oil, become obsolete overnight. The sprawling suburbs of North America, built on the premise of a 40-minute commute in a 3-ton SUV, become vulnerability zones. Property values in distant outskirts crater as the cost of the daily drive exceeds the monthly mortgage payment. We see a frantic, chaotic attempt to densify our cities and rebuild public transit systems that were neglected for half a century. But this transition is not smooth. It requires trillions of dollars in new investment at a time when the economy is already shrinking. The big box retail model collapses as consumers can no longer afford to drive 20 miles to a warehouse store. We see the return of the local general store and the walking neighborhood, but it feels less like a nostalgic revival and more like a desperate survival strategy. The physical layout of our lives is being forcibly resculpted by the price of a barrel of crude, and the transition is leaving millions of people stranded in an infrastructure that no longer works.